Welcome to Charting the Markets on this Wednesday morning, 22nd of November. As of the time of this webcast, we are awaiting the UK Chancellor Exchequer to stand up in front of the House of Commons and deliver the autumn statement. Will what he says move sterling, or will it do anything else on the markets? We'll have to see what happens. We're looking in the next 15 minutes at charts that indicate to a point of the travel for sterling. Also taking a look at what's happening with the background of both sterling and also the euro in terms of what's happening with the dollar, because we've seen the dollar pull back recently. We saw the Federal Reserve interest rate, meeting minutes released last night of the last interest rate decision where it left interest rates on hold. It certainly seems like now that the markets are pricing in no move up again from the Fed in this cycle. But could we see an interest rate cut next May? That certainly wasn't mentioned in the minutes, but of course we have had some economic data subsequent to the release of the Fed rate decision, where we've seen evidence that inflation is starting to get under control. So all these factors are filling into the currency markets. Let's introduce our guest now for the next 15 minutes. It's Patricia Elbaz from Financial Trends who joins us. So welcome back.
Good morning,
nice to see you again in the studio. I was saying there about the autumn statement. You want to take a look at what's happening with sterling. But of course, whenever you look at the foreign exchange markets, you have to look at both sides. And we're looking at sterling against the dollar. But of course, we do have this dollar story underlying pretty much all the markets where we've seen the dollar pull back, giving some extra uplift to some of these currencies, including sterling. How do you go about looking at the sterling dollar chart?
Yes, so it's interesting because we've seen a rally in sterling, and I saw whenever it's around 120, 121, there's a lot of sterling bears coming out and talking about the mid 115s. What we've seen actually, sterling be quite resilient. So if we look at the long-term chart that we have here, we've seen a series of doji patterns. What do they mean? It means when we move down, there is a kind of a pause, and then the market tries to pick up again. And just recently, we've seen a breakout of the range at 125.15. So with all the news coming up, as you say, we've got the autumn statement coming up. We've got quite a lot of news as well. We're looking at a possibility that we see sterling extending towards 126.60, 127.
And we're currently trading at just over 125. Where would you put your stop loss? How far down below? When you're talking about range trading like this, as we've seen in the breakout, are those lines significant in terms of where you would put your stop loss?
Yes, so I would put it, the bottom of the range is at 123.80, which is quite far out. I would come a bit closer and around 124.60, which is the initial support. So I would look at these levels. And in terms of the extension, as far as we could go, we're looking at going back towards 130. So this is more of a medium-term target.
Okay, so that would take us back then to the levels not seen since the summer of this year. So
yes, correct.
That's quite a long move. Back into the back end of this year, or are you expecting that sort of price action to continue into 2024? Is it going to be that sort of length of time? Yeah,
I think more towards the first quarter of 2024 to look more into the 30s rather than below the 120s.
Yeah. Okay. As I said, of interest as well is what's happening with the euro-dollar trade, one of the big ones that the foreign exchange markets always works towards. Let's take a look at this chart, because you've got a little bit of a range there as well, which we seem to have broken out of. Same sort of story?
Yes, so very similar story. We have got a range top that we've broken out of. One thing we look quite closely at for the medium term is the 200-day moving average. And if we can see that, that was broken at the beginning about a week ago, and we've seen something like very strong support there. So here again, 110 is our psychological level to move towards the 115 area.
Let's talk about the candle action that we've seen here. You spoke about dojis in the last chart, where you've got a very, very thin body and with two relatively long wicks. Explain more about what's happening here in terms of how you trade the bullish engulfing. At the bottom of this trend here, you saw this bullish engulfing candle. What does that mean exactly? How do you, when you identify this, what period do you under, how long after it happens do you know that it's going to give you upside impetus?
Yes, so what's interesting on the bullish engulfing here is that it happens at the lows, and the market goes lower and then breaks higher. So you're engulfing the previous day's range and then you close higher. So this is a clear signal that there is going to be a turnaround, clear buying signal. And sometimes people wait for the next bullish candle in order to be more cautious.
Yeah.
But really, when you see a bullish engulfing, it's a clear buy signal.
And hammer, same sort of thing? Bottom formation?
Yes, so it's kind of a base forming here, and we see it around 105, very strong base there, followed by the hammer. And in terms of support, there seems to be some very strong support around 108.50. So quite a long way off from where we are now.
Same question about sterling as we had when we were talking about the longer term picture. Going into 2024, you expect further upside for the euro against the dollar?
Looking for the euro to gain further against the dollar, yes.
Okay, all right. Let's move on and to another chart. One of the charts we've been talking about, very long-term development, is what's happening with the dollar yen. Now, we know the Japanese central bank, of course, has had record low interest rates, and it's kept on with that strategy right the way throughout this period of rising interest rates here in the UK, the Eurozone, and of course also the States,
Yes.
which has put a lot of pressure on the Japanese yen. You've got a couple of interesting charts here. I want to begin first of all with the first one. Explain more about what you've got here, because it doesn't look to me like a normal dollar yen chart up to date. Of course, it's
so
not.
this is interesting because going back to May, we were speaking about it
Yeah.
at one of the charting the markets, and we're both saying how there was this trend line going up. And we looked at, again, some of the candlestick formation. Here we had a series of 3 hammers following each other. So it was one after the other. And it did create a base here. So we had the rally, we had a move through the 200-day moving average. So at the time when I was in, it was 136.80. So it was sitting on the 200-day moving average. So this base was created, and we're looking at initially 140 to 145. And then also I was talking about the fact that there could be intervention, because often when we see the yen getting so weak, there is often BOJ intervention. So if we move on to the most recent updated chart, so this is continuing from what we've seen, it did actually hit above 150, 152. So since looking at the chart at the moment, it does look like there is a topish formation. So it does look like the gains have extended so much. It looks like we've formed something like a harami pattern.
And that is what, Harami?
So it would be a candle within a candle, meaning you're not trying to push higher or lower, you're pausing. Harami could also be a sign of reversal. So in this case, we're looking for possibly the dollar yen to head towards 146. So some kind of weakness from the dollar from here, possibly some range trading, not looking at major highs above 152 at the moment.
But of course, two things that impact on this, not so much necessarily what the Fed is doing, but what the Bank of Japan is doing. As you said, intervention. If they come with intervention, then we expect this to plummet, presumably, which is what happened in October last year, didn't it? When we saw the markets hit that 130 and pull back. Circumstances very different, of course. The Bank of Japan possibly may do some tightening around New Year. There were some suggestions that might occur. We don't know yet. We won't know until 2024. But that itself could actually presumably give some sort of strength to the yen, especially if we see the Federal Reserve begin to start to price in interest rate cuts from May.
Right.
So that would give you extra impetus on the downside. But how much further on down? 146, I mean, is that done, or is that further lows on from there if you see that broken?
Yeah, I'd be very wary about calling it a lot lower, but I do think we have come to some kind of top at the moment. So I'd be very comfortable saying 146, 145. All depends if that trend line eventually gets challenged, which is at the moment 144, but it would be going up as we go along the trend line there.
Of course, yeah, sure. The other chart I want to take a look at, and you've delivered, as you always do, gold, because gold is quite the contrarian trade to dollar moves quite often. But we have other factors, of course, at play at the moment for gold. What would you warn or caution or say to gold traders about where we are?
Yeah, so we always look at psychological levels. We've spoken a lot about psychological levels, and 2000 has been the psychological level for gold. And we've tried so many times. We've looked at the long-term chart. We had 250, 2070, 2080 as the record highs. So there is a lot going on above 2000. We're at 3-week highs at the moment. The longer we stay above 2000, the more of a chance that gold would carry on and try to challenge those 3 major highs. Overall, we are bullish on gold. The other thing which is interesting is, again, we have this Harami pattern, which was at the top, and as a result, we had the correction. And more recently, the hammer, which here is quite a strong buy signal. And it happened also the same level as the moving averages that we've seen on here. So really 2000 is the number to keep watch on. If that can act as a support, we can clear the new highs, but it is going to be maybe one of those slow rally rather than something quite sharp.
Do you get the feeling that there are a lot of triggers in around the 2100 level to sell? I mean, we often, when you hit a ceiling, it is because you get those automatic triggers to sell, don't you, in the market? I mean, it's going to take a bit of breaking through, but I guess it's just a question of attrition until we get through.
Yes.
But then what happens?
But it could also be a trigger to buy. It could be if somebody said, okay, this is where I think
okay, fine.
2000, I think my long term, I'm actually looking at 3000. So I'm not a short term investor. I want to keep that and I want to look at the long term. So 2000 could be the level which they, okay, we're going back towards record highs and higher. So really interesting to see how much the market can actually push above that level and stay above that level.
Okay, all right. Well, that brings us to the end. Thanks indeed for joining us.
Thanks.
It's a quick trip round some of the markets and some of those foreign exchange markets going into the back end of this year. As I said, we are awaiting the Chancellor of the Exchequer to stand up and deliver his autumn statement in a short while, which could give some volatility to sterling. We'll have to see just what it is that comes out. If it's a curveball, it's unlikely because he's been talking about this over the last 2 or 3 days or so, almost at the point of the statement possibly being something which might be a bit of a yawn. But we'll have to see how things develop. But certainly going to the back end of the year, it's worth watching what happens in the foreign exchange markets, especially for the dollar, as we see the markets continue to price in something that the Fed has yet to signify. That's it for today's chart in the markets. So we're back at 1:30 p.m. today for Beat the Streets as we look ahead to the start of today's US session. A couple of stocks to watch out for as we saw some movement late last night on the way down for both Nvidia and also HP. 2 stocks, all sessions on the IG platform indicating a lower open when things get underway a little bit later on today.